market when it comes has to be the worst in my lifetime. These are the words of Jim Rogers as he gives his stand on the coming bear market. Welcome to Finan Simple, where money is made easy. And today we will explain the incoming bear market and how it can potentially affect you. The rising inflation and national debt of the United States has opened the possibilities of a global recession, maybe even the worst, as renowned investor Jim Rogers has mentioned. The invasion of Ukraine by Russia also has its own severe economic impacts. Ever since the hilarious post-pandemic economic recovery, Rogers has been warning of the looming economic unrest. If the conflict comes to a close, he believes stock prices may temporarily rebound in major markets. However, it will immediately turn down and enter a bear market. What's scary is it will likely be worse than the global financial crisis of 2008. This was during the collapse of the US investment bank Lehman Brothers. As he mentioned earlier, the next recession will possibly be the worst in his lifetime. For those of you that think that a bear market won't happen again, Rogers said that it would only be a fantastic dream. He addresses how the Fed and the US government have been feeding us lies, deceptions that things are under control, and a bear market is not happening anytime soon. This is absolutely false. History has proven that bear markets have always occurred and will occur again. The continuous incompetence by the Fed has worsened how the coming bear market will hit. But Rogers has given an idea of how he will manage during these trying times, especially for this upcoming economic crisis. Jim Rogers still has a big supply of silver. He does not plan to buy more as of the moment, as he is waiting for a change. Waiting for market timing perhaps, but he has mentioned that he only plans to purchase more depending on the market prices, both silver and gold, but mostly silver. It's all a matter of waiting for the right time. Before this fiasco ends, he says that we could possibly experience the worst bear market in all our lifetime. It was the same in 2008 and 2009 when too much debt became an issue. Today, debt is everywhere to the point that even China's debt has exponentially grown to alarming heights. Ever since the last bear market, the debt has skyrocketed. The US government assures us that they have everything under control and there won't be another bear market. But Rogers has no faith in those words. There is a rally waiting to happen in the US stock market. It could possibly be triggered by an event in Ukraine. Peace is attained on both sides as ceasefire takes place. It would then pave the way for a big rally in the stock market, but this rally could very well be the last big blowout before the market falls off the cliff. A big rally would indeed get everybody excited once again. Central banks would then tell us to calm down. There is nothing to worry about. But we should be worried. After that, it could very well all come crashing down. A dreadful bear market is on its way. It happens when people least expect it. At first, they would get excited and not worry. Oil prices would go down. Wheat prices would fall. There's no need to worry about inflation, right? Central banks would then calm down. What happens? A blow off. After long bull markets, a big blow off takes place. The end of the 1990s saw an enormous blow off through the explosion of the dot-com era. It usually ends in that manner. A big rally among the population and then the updraft is gone and we'll begin to sink. Politicians would often blame foreigners, but nobody saw this coming. This started long before Putin. The inflation happening now was before anybody even knew Putin. It was only emphasized through recent events. Oil prices have increased tenfold, but Mr. Putin is not the driving force here. The real culprits are those in Washington, D.C. They have been granted two mandates by law to specifically prevent what is happening now. One to keep the currency in check, the other to maintain having good employment. That is the law. Sadly, they ignore it. They'd rather keep their jobs than sacrifice themselves for the good of the country. Printing money will not help the US. Yet, they believe otherwise. Then they convince us that there is no inflation. Jim Rogers warns us not to listen to them. They are either clueless or masterfully orchestrating what's happening. Interest rates are rising and to what extent? But inflation has been at its highest rate in the last 40 years. If they want to solve the problem, they have to kill inflation. The last time we had severe inflation was in the late 70s. The chairman of the Federal Reserve back then made short-term interest rates exceed 20%. Paul Volcker took the advice to hit inflation very hard. He raised interest rates in a staggering way. He knew what the right thing to do was. However, comparing it to the current developments, interest rates are nowhere near 20%. The current Federal Reserve only raised it a bit. Raising interest rates a bit is not going to be enough, especially for the highest inflation we have seen in our lifetime. A peace occurring between the conflict may help. It will help, but only for a little while. A big time raise in interest rates is what's needed, but the Fed will not do it. They do a little and say it is taking effect and can now move on other issues. Saying outright that they are not going to raise anymore is not an option. They would rather raise it a little, play politics, and not meet the problem head on. In terms of Rogers' portfolio, he is not buying anything yet. He currently holds a good amount of silver. He has not sold any for decades. There is the chance that he'll buy if silver hits $29. He'll buy a lot. He expects to own a lot more silver by the time this all ends. Silver has been down big time from its all-time high. Gold has also been down, only by a little, from its peak. He suggests that if you were to buy, silver is by far a better choice than gold. Buying both is a good call, but buying more silver is the way to go as silver is down dramatically. Warnings are coming from everywhere, and top level investors are telling us that a big change is coming. Don't be the last to know or the one who jumped in at the peak only to watch it all fall apart. Always stay focused on learning and developing discipline. Get educated, make a plan, and stay the course. If you found this informative, smash the like button, please share it with a friend, comment down below, and let us know what would you like to have made Finance Simple next. And definitely subscribe so you don't miss new content. Keep your head up, ears open, and always search for knowledge. See you soon!